Welcome to the BankTalk podcast, the show where we talk to leaders and experts from the community banking sector. Whether you are a current CEO or aspire to be one, this podcast will give you valuable insights and advice on how to run your financial institution better. Each episode explores a new topic with a guest who brings their unique experience and knowledge. Tune in and discover something new each time you listen.
Hi, and welcome to Bank Talk. I'm Charlie Kelly, your host and partner at Remedy Consulting. Today we have with us Tom Knapp from FreshRiver.ai. We've been in search of a guest that can speak to where AI is going in banking. You know, outside of, I'm sure most of our listeners have probably heard an AI presentation. You know, to me, I tend to boil it down to, there's a lot of chat GBT stuff going on out there, but I was looking for some very specific use cases around AI and, where AI might help in banking. And so got together with Tom, known him from a previous life. And he had a couple of very interesting use cases on the mortgage side and, some things that FreshRiver.ai or what they're doing for a living these days. And I just thought, might be useful because I think as we speak to a lot of CEOs, we have conversations around what AI is and what it's going to do for the industry. And, short of taking away jobs and creating some marketing material for you, I don't know that a lot of folks have really gotten their heads around exactly where this thing is going. So without further ado, let's talk to Tom, see where they're taking this and, some of those things that they've found useful for banks in our space. And we'll see where it takes us. Let's join Tom. Okay, welcome back to Bank Talk. I have with me Tom Knapp. Tom, thank you for joining me today.
Thanks, Charlie. I appreciate the opportunity.
So, Tom, we have a little bit of history together. Without boring the audience, can you give us a couple of minutes of just what have you done to get here? Yeah, I know you're with Fresh River today, but just give me a little bit of background on kind of where you come from in the last 10 years or so.
Sure. So, Charlie, you and I worked together at Fiserv. We were part of at the time I was there, I was the CIO in the ClearTouch Bank Platform Group. And I think we did some good work together there. And Fiserv was a great place to work at and get that experience. I left Fiserv and actually went to work with a kind of a friend of mine who had started up a mortgage lending company. It was a national mortgage lender. They'd actually started out and ended up being bought by a bank. So they operated, or company Waterstone Mortgage operated as a independent mortgage bank, but we were owned by a bank and we were subject to all the guidelines and regulations. We were FDIC audited. So I was there for about 12 years before I retired. And about the last year that I was there, I got very interested in AI and the opportunities that AI presented in financial services, but specifically in mortgage lending. And got connected with a woman who had started up a AI consulting company out in New Jersey. And once I retired, and I say that in quotes, I affiliated with her and have been part of her group now for about 2.5 years, and have gotten deeply into AI, generative AI, agentic AI, and I'm anxious to talk about what I see as some of the benefits to AI in the financial services space. And of course, I'll probably be a little bit biased towards mortgage, but that's kind of where I've been over the last 25 years or so.
Yeah, no, I appreciate that. And I think, on our end, AI is such a popular topic that, and I sit in on a lot of bankers association sessions and I listen to the AI and where it's coming and how it's going to be. And I always struggle a little bit to find a use case outside of marketing materials for AI as it relates to the community banker. And again, with mortgage being that close, not everybody is, as we talked about, not everybody's pooling their own mortgages these days.
Right.
And not as many of them are maybe as familiar as you and I are with our backgrounds in, and just what the back end of that mortgage space looks like. But I think most of our listeners would understand, sort of what the back end of that process looks like. And when you and I talked and you were telling me the use cases, I kind of glommed onto it and found it really interesting. So well, let's start with this. I think some of our folks may not be real familiar with the mortgage, sort of the back end of the mortgage space. right? So can you just walk us through mortgage and pooling? And I mean, we don't have to go in real depth because we have had other Bank Talk episodes on it. But when it comes to the amount of data, I want folks to understand just how that back end works a little bit. Can you give us just a brief description of that, please?
Yeah, Charlie, let me do that, and I'll try to do it at a high level, get through it pretty quickly. But when you think about mortgage, we were an originator. So essentially, what that meant is that we would obviously secure individuals that were interested in home buying, and we'd help them with the origination of the loan. And they could end up qualifying for kind of a conventional loan. Maybe they were a veteran, go to a VA loan or an FHA loan. So there was a lot of, if you will, different loan type structures. Each one of those came with specific data and form requirements. So we'd go through the loan origination process. We would go through underwriting. It would get approved for closing. We would go through the closing process. So essentially, we would create the closing documents. And now, with the advent of e-signing and remote online notaries and the ability to really do an e-closing, it has changed a bit for the good. But we'd have the title companies would contribute whatever documents they had that would be needed for the closing. Others that might have documentation that would need to be included. But we'd get to the closing table, the borrower or the co-borrowers, whatever the case may be, would sign the documents, either wet sign or again with the e-closing, be able to e-sign those documents. But at the end of that process, the loan package would come back to us as the originator. And we would be obligated at that point in time, based on Fannie and Freddie guidelines, to do a QC of up to 10% or around 10% of those loans. And we would be looking for compliance, TRID compliance, other kinds of requirements, that maybe overlays that we had to make sure that we were getting back accurate data, all the forms we needed. We would look at the completeness of the forms because at the end of that process, we're selling the loans. So we fund the loan through our warehouse line at the time of closing, but we're anxious to get those loans off of our warehouse line as quickly as we can, get them sold. So doing a good job of getting those documents back, assembling those, QCing them, and then packaging those up for sale. And if we were maintaining, in some cases, we were maintaining the security or the service rights to that. We may subservice that, or we may sell the loan in whole to a buyer. That buyer, and again, in our case, it could be some of the big name banks that were buying loans, maybe a Chase or a Wells, but they would buy the loan and they would do their own QC then at that point in time to make sure that the asset that they're buying and putting onto their books was of quality and really was complete, so that they could be rely on the loan that we had created. If they found a deficiency in that loan, it may be a document was missing, there may be data that was incorrect or was incorrect from document, or document didn't sync, they could push that loan back to us and say, it didn't meet the requirements that you committed to providing in terms of quality. And oftentimes, if the defect was serious enough, we would then have to sell that loan, not to an aggregator or an end buyer, but we would put it up for sale on scratch and dent market. Once it goes to scratch and dent, you're taking a pretty significant discount on the value of that loan. So part of our objective was to produce as high quality loans. And at Waterstone, I think we did a great job, but to produce as high quality a loan as we could, so that by the time it's being set and, as you said, put into in some cases, a pool that was being sold, that it was going to be successful in getting sold or included in that pool. So we didn't have all the back end work that was needed if the loan was returned to us. So from an efficiency standpoint, I think just from a workload standpoint, making sure that there's quality built into the process and that we had a good QC process, what we called a post-close QC process, that would ensure that when we go to finish off the loan, which is selling that loan, and then we would get paid for it, that we had a very high degree of confidence that that loan was going to be successful and not returned to us.
No, that's a great summary, Tom. Thank you. And to add a little flavor to that, I think I told you at one point I was working for one of the large servicers at one point in my career. And, the way we thought about it was there was honestly, it was like there was a channel from their retail branches and then a channel from their correspondent branches, right? So the correspondent, if you think of correspondent as being, it came from somebody else, right?
Right.
That's where that second review came in, right? They had to come in and make sure that if they were either gonna buy the servicing or they were gonna buy the asset, they had to make sure that, not only did they have all the documentation, but they had, that somebody didn't sell them something fraudulent, and sometimes it's not just fraud. Sometimes it's just something missing. They missed an underwriting requirement or something along those lines. So, on the other side of
Absolutely.
that, back in the day, you'd have boxes and boxes of these things. They would just come in volume, and the volume was shocking, right? So, all right. So thank you very much. I appreciate that summary. Let me go back one step here because now let's get back to AI, right? I think when I think about AI and the kind of the use cases we talked about, the first thing that comes to mind is sort of large data. And I would imagine that anybody that's going to try to use AI, and we'll explain why they're going to use AI in the mortgage space. But I would think if they try to use AI, one of their concerns might be they don't want to just go plug their data, whether that be, their data, their customers' data, into a chat GBT, right? Am I thinking about that right? Because, you know, I think if I read the trade publications, I would almost say that ChatGPT could do something with some of the problems we're going to talk about here. But the way I'm thinking about it, I don't know that it would seem like there's either a security concern, a concern about the public, whether that data is truly, whether the ChatGPT models are truly secure and all that business. So how's the universe these days thinking about, whether or not I could just go use ChatGPT if I'm trying to solve my own problem?
We'll be right back.
Is your technology spend getting a little out of hand? Are you worried about making those big strategic moves because of those hefty vendor contracts? Or maybe you just feel like your technology is currently holding you back. In today's banking world, overspending on technology is a risk you just can't take. Going up against those major vendors on your own can be tough, expensive, and especially when the contracts are designed to benefit them. That's where Remedy can come in. Remedy Consulting helps our clients stay competitive and grow their business with the right technology, products, and their spending strategies. Not a Remedy client yet? Head on over to remedyconsult.net for a free review of your tech stack, spending, and contract terms. Even if you're not the perfect fit, you'll walk away with expert advice and confidence in your technology decisions. Check us out at remedyconsult.net or give us a call at 262-955-7776. Thanks for tuning in, and now let's get back to the episode.
Yeah, I think that's a great point, and I think you're spot on in your analysis there. So I think when we think at Chat GPT, or there's other versions out there, Claude, or if you're a Google user, they have their own models, but those are all referred to as kind of closed models. So what that means essentially is the model was trained using data and really by the software company. So they actually trained it. So if you go to use that model, you're relying on how they trained it. And most of them are, they're certainly good. There's deficiencies in that. We hear, obviously frequently about somebody using Chat GPT or Claude or one of the closed models and getting an answer that's inappropriate or inaccurate. So the issue becomes there twofold. One is, can you rely on how it was trained? And can you influence it in how it's being trained? The answer to those is you can't really influence it. It's the training of the model is in the hands of the vendor. So what we see generally in the market right now is heck, I use these models of Chat GPT every day. I mean, I'm doing something where, hey, I'm going to put this into Chat GPT. Just this morning, I had a call with a potential client, and I wanted to put together a follow-up email and make sure that it was kind of hard-hitting, got the points across, and that it was well positioned. So I prepared that. I then ran it through Chat GPT to get some improvements, and it was an improvement. And frankly, for me, it was a great productivity tool. What we're talking about, especially when we're talking about banks and credit unions and financial institutions, they're looking for enterprise solutions. And these are enterprise solutions that don't meet just necessarily an individual's productivity requirements, but the productivity requirements and the processing that would happen in the enterprise. So that really puts us in a different set of requirements. I want to control the data. So I don't want to put my data, I don't want to put loan data as example into ChatGPT. I have a obligation to protect that data. And I certainly don't want to put it out into the open where it could potentially be used for inappropriate purposes. So I'm very hesitant to that. I'm very hesitant if I am audited. In our case, we were audited by the FDIC, but if I've got, a government auditor coming in or a financial auditor coming in, obviously they're very much focused on how we control and protect our data. If I indicate that I let that data, if you will, go out of our walled gardens into a Chat GPT environment, have I really violated my internal policies of data protection? So what we see is there is the advent of more what we call open models. And those are open models that can be developed and they can be trained for an individual either function or an individual enterprise's requirements. So it does two things. It allows us to train and know how the model was trained so we can rely on that. So when somebody looks at that, saying, well, how do you know that the results that is being produced by the AI is accurate? I can come back and say, well, here's how I trained it, and here's how I govern it, which is we can talk about governance, but governing those AI models going forward is really critical as well, so that we know that they're producing accurate results. But I also can indicate that the data didn't leave my premises. That I can control where that data is and how it's being used, and it's being used appropriately, and it's being used in a way that I can attest to the fact that it's still secure and private. So what we see for enterprises, Charlie, and then I think that's one of the things we want to talk about. What we see is a trend in the market right now is for large enterprise solutions. We're seeing more reliability or use of these open models, and where we can control not only how the model's being trained, but how the data is being used.
Excellent. Excellent. No, that's very, very informative and very useful. I want to unpack a couple things you said because you spoke over me a little bit there, meaning above my intelligence level, for lack of a better way to put it. So can I think of a trained model as the two that I'm most familiar with are probably your Chat GBTs and then the AI you plug into Google every day, right? And you get the AI results, which is
Yeah,
another search criteria. But can I think of a trained model as they built it for probably a large audience and for a specific purpose? That's sort of right. They train and they'll continue to govern that model based on criteria set up for Charlie making a search on Google, right? For lack of a better term.
absolutely. Yep.
Charlie's not trying to do something special with it. He's got a very specific purpose, but there are a million Charlies out there. And that's why it becomes, valuable for Google or ChatGPT or anybody to go do this thing for a living. Is that it? Do I have the concept of train versus
Yes.
open? Is that an acceptable use of
It
that?
it is. So there's and without trying to, I guess, jump too large into the technology, there's kind of really two layers of an AI infrastructure. One is there a base layer, which is kind of called an inference engine, and that inference engine is a large database where data is come into, where then that data is used to train the models, so that an individual large language models, the LLMs that are being developed, are on top of this inference engine that does all the heavy lifting of the data. but the logic and the use case is in that LLM. So there's kind of two levels. So I developed the inference engine, which is the raw technology. It's it's where the AI intelligence sits. And then on top of that, I have the LLM, which is the model. So it might be a model in our case for a post-close QC, or it could be a model for identifying a medical scan and trying to do some identification of what they're seeing. It may be a model that looks at a PDF that comes in and breaks that PDF up and analyzes the data in there and gets results. I mentioned to you, Charlie, that one of the things that we've done recently, but I think again it's reflective of the market, is looking at what's referred to vision models that can take documents and PDFs in and look at the content and make decisions about that content. Either, what is this document? What is the content? But it can also do very specific functions like looking at a signature. So in this case that I mentioned that you and I talked about, we can actually look at, tens of hundreds of documents that come in that support a mortgage and look at the signatures and kind of determine if the signatures are consistent. And if they're not, is that okay? Maybe they're close enough to say, yeah, it really is okay. Or is it a case of perhaps fraud or some other inappropriate step was taken? So the benefit of having this model is I can look at, page after page of documentation, and whether it's mortgage documentation or for an insurance application or for just about, any kind of application that is getting documents in. And let's face it, as much as we think we'd like to be in a paperless environment, we're not always in a paperless environment. So being able to look at those documents and inspect them and make decisions and do that at scale, do that at gosh, some of these packages that you get in, and think of your own cases, whether it's a commercial loan or a consumer loan. You've got lots of documents that are coming in that in many cases they originated digitally, but they were signed and returned in a PDF or a document form. And the ability to be able to get through and look at each one of those and say, is this meeting my QC, requirements? And do I see anything in these documents that are unusual? So it's an unusual signature. It's not consistent, or there's something else that is evident there. The models are trained in such a way and for that specific use case to produce the results that we're looking for. So, and then taking it, if there's action that needs to be taken, then taking that action.
Okay. No, and that's great. And that's great. Because I mean, I think when we were talking about it, we were saying, look, there's a use case there that says, allow me to keep these mortgages out of the scratch and dent pile, right?
Right.
As soon as possible. And in doing that, I'm sure. So I'm going to ask you about let me just ask you about the scratch and dent use case that we talked about before. So the theory, I think, in that review process, when we did it way back in the day, it was literally an army of people going through these documents and doing a document review. That document review might be, where's the mortgage, where's the note, do we, are all the pieces filled out of the underwriting, some of the underwriting documents, is the HUD one there, all that kind of stuff. But in there, you ended up with a file that had 40 pages and 40 pages with, each of them 300 data elements on it, right? So there was a lot of data there.
Oh,
You
yeah.
couldn't check them all. And if you had that job, you either had to drink a lot of coffee, right? Or you wouldn't keep the job very long because it was a very mundane job. You couldn't do it 8 hours a day.
Absolutely.
A lot of part-timers and that kind of thing, right? Because it puts you to sleep or you'd miss things, right? So as I think about, if we could go through the use case of let's take fraud out of it just for a minute. Let's just say my goal is I'm a bank who wants to originate loans, and I have a loan originator, and I have an underwriter, and I have, multiple branches around the country. So they're not all the same originator, not all the same underwriting department, right? The consistency of that is really where I think a really interesting use case is trying to determine and keep them out of the scratch and dent market or whatever. But give us a little bit more feedback on that. I mean, I'm assuming
Well,
you have some use cases that specifically help stop that.
absolutely. And I think if I could, while we've talked about mortgage lending, I had a discussion this morning with a very large national insurance broker. And when you think about the policies that they're creating on a regular basis for, a large commercial entity, and the need to do, kind of the same kind of QC, looking at this, make sure that if I issued a binder early on to the company, and later on I get the policy, I want to make sure that the policy that's returned is accurate and consistent with what we've talked about. And it's the same type of kind of everybody's heard stare and compare, but it's the same kind of effort to manually go through this. And the you pointed it out. It's mundane. It's repetitive. You get to the point where if you haven't had enough coffee, you're
You're a zombie.
probably not
Yeah.
catching things that you'd like. And the other thing, it's not scalable. So one of the issues that we had is during COVID, as we had significant volumes of loan coming in the immediate post-COVID period, we had to ramp up those functions. Well, guess what? As mortgage rates went up and where we sit now, I'm not getting the same volume. So now I'm in a situation where I either need to, lay off or downsize to be appropriate for the volumes I'm getting in. Another reason to have a automated fashion that is scalable, and again, having those individuals that are trained that can still look at the results of the AI post-close process, because there still needs to be human review and confirmation, especially when there's exceptions. But that's really some of the, if you will, when we look at defining what the benefits are of putting something in like this in place. Those are the real benefits that you get out of that. So again, what when you look at it, there's probably 4 or 5 key steps we look at. Am I getting all the documents returned that I expected? So am I missing any documentation in that package? If I'm missing a document, it's maybe a critical document that I need to have. Secondly, am I meeting all the compliance requirements? So things like TRID requirements, truth in lending, other types of requirements. Do I have all those? Do I have the loan estimate, the most recent loan estimate, the most recent closing document? Are they there and are they complete? Is the data consistent from form to form? And if I'm expecting a signature, is the signature there, or do I need to run after the borrower to get it signed post close? And then I mentioned to you too, you can look at fraud and other things through the AI, but it's applying those rule sets to the documents that would come in. And then maybe I have my own set of requirements called overlays. There's certain things that I would expect to see there that may be unique. It may not be a Fannie or Freddie requirement. It may not be a requirement of the aggregator that I'm selling it to, but it's my requirement that I put in place. Am I meeting those requirements? So it's doing all those tests. And when you think about it, and this is where when we think about use cases, this is what we kind of refer to as low-hanging fruit. This is something we can get at. We know we can develop the models that can do this, and we know that it can produce results, the kind of results that we can define up front, and kind of the where does it create value within the organization by putting these kinds of applications in place. And Charlie, I don't think I'm going to take a left turn here, but I'm going to go back to kind of one of your opening comments. And an organization still struggle with use cases. They still struggle, say, I get it. AI, yeah, it's here, it's going to be here. I really know that I need to do something with it, but I'm struggling with what the use case is. And so one of the things that I think is best practices in this area is to look at certainly look at your business strategy, no doubt. Look at where your pain points are. Look at where there may be opportunities, and then say, is this something that I could attack with AI, or can I resolve this with AI? But it's really sitting down within the organization. The other piece that I would recommend as you go through this, you have to start with a manageable use case. So start with the manageable use case. We think post-close QC in most cases is manageable, and kind of build from there. Get familiar with it. Once you've built out that first use case, oftentimes there's lots of reusability, and certainly there's a lot of education that goes on with that. But I would tell you that I think right now, within most organizations, and I'm sure it's true within most financial institutions, if they are struggling, they're struggling. Perhaps it is knowledge, perhaps it is training, but it's understanding where can I apply this? And you and I talked about this, and I'll just conclude by saying, seeing is believing in AI. If you can see a solution that's been developed and understand how it was developed and the benefit that it produced, that's huge. There's lots of seminars out there. There's a lots of places you can go and hear about AI and what it is and whatnot. Seeing it and understanding how this particular use case was developed and how the technology, that makes all the difference in the world. I think that's a big part of kind of educating and training is seeing some of these that have been developed and understanding the benefit of that. So we're
Yeah.
big proponent of that.
So, Tom, do you think that kind of going back to your red, like you kind of broke down the difference between the inference engine and the large language model and all,
Yes.
right? The technology side of it. Do you think that most CEOs, CIOs, COOs are, do you think they struggle with the fact that the technology scares them? Meaning, and again, I'll use my use case, right? My use case is I certainly understand what happens when I go plug something into ChatGPT. I certainly understand what happens when I type a couple words into Google, right? I understand what the result of that is. But when it comes to, even something as mundane as this post closing process that we talked about, right, as time consuming and all that, right? Do you think that they struggle to say, okay, I mean, I get that I have a problem here. I got, people falling asleep on the job. I got this,
Sure.
right? This same things we talked about. I got to hire and then I got to fire because interest rates change, all that stuff. But they can't necessarily say, okay, what does AI do for that? Because they're stuck in they're sort of stuck in the fact that, you know, I, I don't know how the tech is going to get my head around to this thing or get me a
Yeah.
solution that pops out the other end and solves my use case. Just give me your thoughts on that. I don't know if maybe if you can understand what I just said there.
No, yeah, I think again, I think this is the part of it, and I guess I would not put the blame necessarily on the CIO or the technology. For I think it starts at the board level, is getting them comfortable that as a strategy, we're going to leverage AI within the organization, and to be able to get them comfortable, certainly executive management. But I would say this, I think it's important that there is somebody on the business side. So in this case, maybe if it's in your financial institution, it's the head of lending or the chief operating officer or the subject matter expert, in that area, that they have ownership, that they understand what the challenges are that we're trying to meet with AI, and they have the ability to, you know, push the project forward or support the project. It's not a technology, if you will, problem or issue. The technology's out there. It's really understanding how to use that. And I don't know if I'm clear on that, but I would say it's not the technology group's responsibility, although they do need to get comfortable with it, and they clearly need to be part of that because, again, whether it's security policies or data protection policies, need to make sure that that's that. But it's important to get people comfortable. And when I say people, starting at the board that level, that we have the right policies in place, we have the right governance in place, we've done the right education on AI, and that we're comfortable moving forward with this AI solution and the benefits that it's going to provide to the organization. So certainly I mentioned education and training, having the right policies, but then also understanding, how this technology works. One of the things that we happen to support is these private LLMs as opposed to kind of a public LLMs. It's ownership of that, owning the LLM, owning the data sovereignty that you want to make sure you provide it in terms of how the data is being protected. It's getting comfortable with all of those, and then certainly from an ongoing process is if you own the LLM. You certainly need to have the resources available if you're going to support it in-house with, how do I accommodate changing conditions? How do I accommodate new regulations, for example, in financial
Data security and
market?
that
Yeah,
type.
you bet. So I think that's part of it too. But is there? I think it's like anything that's new, Chuck. Sure, there is resistance until I'm really comfortable with it, and I think that's why you start with what we call low hanging fruit. Get comfortable with that, be able to demonstrate and commit to the value you're going to get out of it, to the improvements you're going to get out of the investment, and then kind of move on from there. Because I think this isn't a project by project. This is a long-term investment building on top of these AI models into other areas within the enterprise that where it can provide value.
Excellent. No, that's very helpful. And I think that concept of the private LLM, I didn't understand that before we had this conversation. I think that's really probably super critical. And again, some of the discussion we're having today is just educating the world, right? And some of it is educating ourselves, right? So to me, that's fascinating that because from a
Yes,
security perspective and from, every chief security officer out there, I think would appreciate that a lot more, knowing that, knowing that they've
absolutely.
got control of the end product, right? For lack
Yeah,
of terms, just
absolutely. Because at the end
open.
of the day, you're going to have auditors and reviewers coming in, and you have to be confident in your ability to say, I'm meeting our policies, I'm meeting our requirement to protect consumer data, et cetera. And so that's certainly got to be a key consideration in any AI project.
Excellent. Last question, because we're getting pretty long on time here, and I don't want folks falling asleep on us.
Yeah, you bet.
Give me a couple other use cases. We talked about sort of post close, and let's just stick to the mortgage space because I'm sure there's 1,000 of them out there, right? But yeah, what about like the fraud AML side of the world? I'm assuming the fraud, when we talk about the signature, that would be one good fraud use case, right? But, is there anything on the, any money laundering side? Like, are there other fraud use cases when it comes to these mortgages? Because to me that, it's not only has the mortgage bumped over to the scratch and dent version, or have you caused yourself a bunch of trouble because you lost documentation or didn't have the right documentation? That's me not hitting my underwriting requirements to finalize the loan. When I think of fraud, though, I think of signatures that are off. Are there other ones there on the fraud side?
Yeah, I think there's a number of those on the fraud side. One that, frankly, that we're looking at. And I think I'd start out by saying, there's a lot of great good uses of AI. And as with any other technology, if you will, the bad guys have also figured out how to use AI for bad or for their own purposes. So in the area of fraud, I think fighting fraud, especially AI generated fraud transactions, we believe requires some AI security and protection services that can analyze various transactions. And I'll give you one example that is front of mind with what we're looking at right now is wire fraud. So, wire fraud has a lot of different legs and tentacles to it. Certainly in mortgage, there's been a history of wire fraud generated transactions that result in financial loss. So I think, look, if you have a very intelligent AI application that's looking at wire fraud request, or excuse me, not wire fraud, but wire request, and looking at that from a standpoint of an intelligent AI bot or an AI application, it certainly can look at characteristics again of the transaction or the request that have been generated by an AI application and can do if you will, a better job of fighting and putting in controls to identify and take appropriate reaction using AI controls that can be built into the system. So that's certainly one of the areas of wire fraud where we believe that's a very logical application for applying an AI model.
Oh, interesting. So you're sort of
Yeah,
reverse engineering what the
exactly.
fraudsters are doing,
Yeah.
more or less, and trying to use
Well,
the same
it's
game
kind of,
system.
kind of cynical here, but a little bit. But you got to fight fire with fire. In this case, as the fraud becomes more sophisticated, it requires a more sophisticated control environment to identify and react to that.
To me, what's fascinating about this whole conversation is the tasks that we're talking about to a human are mundane. Right now, and again, I know we covered this in the loan review, but same thing. I would think the same thing is in the wire game or ACHs or anything in the space. At a certain point, you need a certain person and personality that's going to look those things over every day, right? Whether you call it security, from your laptops or, error reports or whatever, right? You got to go through a million error reports and you got to whittle them down and get to the point where a human can look over the top 5%, right? The
Well,
most critical 5%. And I think if you can get to that point, the 85% that don't really need to be looked over, somebody could look over 5% and still keep their sanity.
right.
To me, that's the common thread, regardless of the use case that we've talked about here.
Well,
You agree with that? Does that make sense?
I do, but when you think about and think back when we were at Fiserv or earlier in our careers, we were either writing code or working with systems. The systems we worked on were very deterministic, and by deterministic I mean they kind of had a lot of if then. So if this happens, I take that action. AI models are non-deterministic. So it's not like we have a set of rules. The AI model is interrogating and getting smarter every time, and it's contextual. So they're looking at certain environments based on the context of fraud or the context of mortgage lending. So I think the issue here is the power of an AI model is yes, it can look at rules, but it learns over time. It takes a lot of factors into account that you couldn't possibly necessarily code into a very deterministic kind of application. So I think understanding that kind of the difference between what we probably and I'm dating myself here a little bit, but what we're used to in terms of how you define requirements and did I meet that requirement in my development? This is a little bit different in terms of just how the AI works and the intelligence that's built into it. And that's why I think things like fraud and looking at large volume of documents, against a staff of people looking at that day after day, just can't perform at the same level of intelligence and consistency that a AI model can.
Yeah, and I would think, and I know you touched on this, and we probably need another podcast for it later, but we had kind of talked about the governance of your own model, right? And I'm assuming that's kind of what you're touching on here, which is you as the use case leader or subject matter expert in your organization has to also be able to go, hey, we might have gotten this logic wrong, right? Let's make
Sure.
sure that regression model is touching on the things that now we're seeing as a result of this. Like if we adjust our, just going back to the fraud, we adjust our model, the fraudsters adjust the way they're doing business. We need to be able to continue to just sort of, right size that thing and right size the logic. It seems to me like the output is probably you got more levers to pull as a user when one of these is said and done, kind of going back to your deterministic,
Well,
non-deterministic, right? You probably have more
yeah.
levers to pull, but you got to also kind of pay attention to the fact that the lever needs to be pulled because you're getting bad data out of it or what have you. And you could never do that with old code.
Well, and part of this too is that, most of these applications have what's called a natural language interface. So, once I have the data and I have the AI model, I can query that in my own language. And so I'm going to query it the way I speak. You're going to query it the way you speak, but the model is going to understand that and it's going to be able to return results. So imagine trying to code for
Interesting.
that. You just couldn't.
Right. Well, Tom, thank you. I really appreciate the time, and I have a feeling we're going to be talking again on Bank Talk here because I think we covered a lot, but we left a lot uncovered. I
Sure.
think as you and I can go offline and talk about some other use cases because the use cases to me are the guts of what make an AI conversation important to anybody.
Well,
board,
I
CEO.
would agree 100%, Charlie. And I think if there's any one message we leave with this is get the use case defined, get the right use case identified for your, if you will, your low hanging fruit. So I absolutely.
Excellent. Well, thank you, Tom. I appreciate your time, and thank you for joining us on Bank Talk.
Thanks, Charlie.
Okay, well, that's it for Bank Talk. Once again, I appreciate Tom and his input. I think I really felt like I learned something. I'm not sure everybody's comes from a different place, but I feel like there's a lot of material here, but most of it was educational. So to me, really appreciate somebody who's got this depth of experience joining us and providing their guidance. So that's it for Bank Talk. Have a good day and keep on learning. Let me do that again. So that's it for Bank Talk. This is Charlie Kelly, your host. Have a good day and keep on learning.
Thank you for joining us on the Bank Talk podcast brought to you by Remedy Consulting. If you enjoyed today's conversation, please rate, review, and share our work with others. To stay up to date with future episodes, be sure to follow the show and turn on notifications. Thanks again, and we'll see you next time.